What's up, owners? Welcome back to Stay Winning Wealth. Thank you for tuning in. I appreciate you being here. Don't forget to hit the like and subscribe. So, yes, you may have seen the charts that show the most expensive real estate market in history. That's even after a rate cut earlier this year. But good news is we're expecting more rate cuts uh, in the next few weeks. So, I wanted to share some charts with you why I believe the housing market is about to get more affordable. And without complicating things, the reason for that is because of simple supply and demand. Okay. But let me go over some charts here for you so we can take a look at this together. And you let me know which one looks better on your screen or which format looks better on your screen. Okay. So the chart that I'm referring to is this one right here. So let me share my screen here and then we can go over this together. Let me add that to the stage. All right, there we go. So, US home price history from 1890 to 2025. That's great. It's been tracked that long. So, obviously, everyone is comparing 2025 to the 2006, 2008 bubble, right? Just based on this here. So, some key information. Back then, they declined about 30% national average. So, 2025, the difference between today and 2008 is we have nowhere near the record number of defaults on mortgages. Okay. Ever since 2008, now Fannie Mae and Freddie Mac have opportunities for a real estate owner to pause their mortgage payment for up to 6 months if they need to. Okay. So, what that does is if there is financial difficulty, even on rental properties, they can call the lender and say, hey, I need to pause my mortgage payments for 3 months or 6 months. And the process is not very difficult. It takes less than 30 days. And a lot of times, all they do is just add those 3 or 6 months that they pause your payments to the end of your loan. So if your loan is to be paid off, for example, in 2030, November 2030, then they might be paid off February 2020, February 2031, just to give an example. So yes, the number of foreclosures is going up, but it's nowhere near 2008 levels. And also, a lot of these are just um, paperwork that hasn't been processed in the last 2 years due to the lockdowns. Okay. So, the average US home price declined about a third percent back in the 2008 market crash. Now, the other reason why that's important in some markets, real estate is up 60% since 2020. That means it's 60% increase in the last 5 years. Okay. On average, most markets are up over 40%. So even if there is a crash like 2008, right, and we take that number, 30%, you're really only looking at 2022 and 2021 real estate prices, right? So not much to panic about, but I still believe housing will get more affordable. So we'll touch that. We'll touch on that why shortly. So if people weren't buying real estate in 2020, when Trump had rates below 3%, if they weren't buying it then, when they were 40% cheaper, I really don't see them buying again. I hope they do. I really hope. I really preach about owning real estate and how it's a great tool to build generational wealth. And as time goes by, it's only going to get more difficult to own real estate. So I really hope people do. But if people weren't taking advantage of real estate back when rates were under 3% and homes were 40%, 50% cheaper, I see it really difficult for people to be taking advantage of similar prices with rates in the 6% range. Okay. But again, I definitely think people should buy real estate and wait versus wait to buy real estate. regardless of where you think the market is. But personally, I do believe the market is getting more affordable. And now we're going to move on to why. So let me stop sharing my screen here. I'll bring up the proper tab. I mean, there's going to be a few tabs that I'll bring up, and then we can go ahead and talk about them. Okay. So the big factor that people look into when it comes to buying real estate is what kind of rate they're going to get. If you follow me on X, right, you would know that rates are moving towards the 6.1% range. So conventional 30-year fixed rates moved down from 6.3s towards the 6.1s. Okay. This could be because there's talk that there might be another Fed rate cut in the meeting. And a lot of times rates are always priced in, um, depending on what people are predicting, right? So that doesn't necessarily mean they're going to hit lower than 6% because a lot of times it's already priced in there. All right. Hence why sometimes after the rate cuts, after the Fed announces rate cuts, you see an increase in the rates because the cut ends up being 0.25% when they're expecting 0.5%, right? So then the rates adjust back to what the market is. Okay. But it's good news that rates are heading lower. For those that are new to real estate or are not in the market or plan to soon be in the market, historically rates are like 7.7%. I think they've been tracking that data since the 50s or 60s. And ever since then, on average, has real estate or mortgage rates have been in the high 7% range, right? So 6.1, 6.3 is below the historical average. Okay. And if you follow me on Instagram, you would see that I made a post about how Kevin O'Leary, doesn't think rates are going to go back down to the 3% range because historically 7% and above is actually normal. However, I'm a big fan of those rate cuts. I'm a big fan of what the rates were during Trump's first term, which we got to see rates as low as 2.65%. And for some people, even lower for those that were in the military, for example. So let me share another slide here or another screen why I believe real estate will continue to get more affordable. So the first thing is rates are moving lower and lower, and we're expecting more rate cuts later this year and early next year, which again, if we hit the 5% range by summer of 2026, we're going to potentially see millions of more people competing for housing, okay, or in the housing market, which is very exciting. Again, I preach about the importance of owning real estate, okay. It's for me personally, the number one way to build or start building generational wealth is the seed that's planted uh, for your future generations to sit in shade, okay. Hey, what's up, Julie? Thank you for tuning in. I appreciate you. Let me know if you have any questions, okay. Let's see, and then okay, I got some text. Everyone starts texting me when I start live streaming. So funny. Let me share my other slide why I believe housing was going to get more affordable. Okay. And then you guys can let me know your thoughts in the comments below. So let me remove this here. And now we're seeing this. So let me go share that. Okay. So earlier this year, around March, it was announced that H-1B visa holders will no longer be eligible for the FHA loans. Okay, if you've been following my real estate journey, you know that FHA is the way I went when I bought my first real estate property. Okay, it's it's a very popular option for first-time home buyers because you only require 3.5%, sometimes even 1%, and sometimes even 0%, depending on where you are in the country. Different states and counties have different programs, but federally, 3.5% is usually what you need for this, right? So just easy math. If the house is 500,000, you're going to need about 15K down, maybe 17, 20K. By the end, all fees are done or cash to close, which when you think about it, if you're controlling a $500,000 asset, 20K is not a lot to put down. So it is a very popular program for any first-time home buyer. But H-1B visa holders were banned from it. And we can see the data here, how the demand just dropped. Now, going back to the beginning of the stream, The real estate formula is very simple: supply and demand. Okay. So, what this does is it now makes people like you and me, Americans, not have to compete with H-1B visa holders over FHA loans for real estate. So, if you remember, look at all this. I mean, I bought around here. My primary property I'm in now, I bought around here in 2021, and I was competing with a lot of H-1B visa holders. So, luckily, because it wasn't my first property, my offer was obviously more enticing to the seller because I wasn't coming in with 3.5%. I was coming in with almost 20% down payment. So I was very blessed to be able to get my offer accepted because the first time I was buying FHA, it took me like 2 years to log in the property. So what this does is it brings down the demand for real estate. Okay, that means there's less people that are approved to go buy property. Right. So now, if you live in, for example, Southern California, that's huge. If you live in the Bay Area, that's very huge because you're now no longer competing with half the population, based on the jobs that are out there. So, what does that mean? You don't have to outbid each other as much. You're not overpaying as much. So, generally, it makes housing more affordable. Generally, the seller understands and has to adjust the prices accordingly, right? So, if they were getting 750 off, 750K, hoping to get 70K, now they're going to be realistic, or they should be realistic and be like, okay, I'm going to go list for 730K. Just an example. Let me go over and share another slide why I believe real estate will keep getting more affordable. And this backs up to what I was saying earlier. So let me share my screen here. Okay. So H-1B visa holders disappear from the housing market. And this is as of this week. This is huge, you guys. Remember, there's 50 million or over 50 million, nearly 55 million people on H-1B visas who are taking advantage of the FHA program. Okay. So the demand, we can literally argue that the demand, even if you take half that number, that's 25 million less people that are in the market to buy real estate. What does that mean for you and me? More opportunity to keep buying real estate, even investment properties, build that generational wealth. If you have 5 kids, buy 5 properties. So when you move on, they each inherit a property, right? Because 30 years from now, especially if you live in California, you may understand houses are going to double, maybe even triple in value. Okay. In 10 years alone, I've seen houses double, right? I've been in the market that long, and some of my real estate has doubled from the prices that I bought it in. And that's in a 10-year span. So if you think about 30 years, when your kids are, what millennials age are now, these $1 million homes, which is starting prices in California, are going to be $3 million. But now there's less competition for housing market. So if there's 55 or nearly 55 million people here on H-1B visas, right, which a lot of these are tech jobs, and tech jobs pay over 100 grand, we're now competing with 55 million less people. And let's just be conservative, we're now competing with 25 million less people when it comes to the housing market. And that change that Trump did back in May, you can see the demand has just dropped significantly. And yes, I recognize we're heading into Q4, and this means, there's not a hot real estate market in general. It always goes down during the winter. Hence why I just bought a rental. I'm sorry. My next fix and flip, I just bought it because I'm not competing with that many people. So if you want to see more of that, like, comment, subscribe. Let me know in the comments, and I'll give you a tour of the next property that I'm flipping. Let me share one last slide here. This is for my renters. So if you're renting, you may want to stay tuned. But again, the formula is very simple: supply and demand. Okay, so we're already seeing the population decrease by over 2 million across the US. I'm not going to mention why. You can do your own research or take a guess why. But that means the rental market is cooling. Okay, so I think that's 4 months in a row now where rental market is cooling. Yes, prices are not as low as they were prior to March 2020 when that big event happened, but they're heading in the right direction as well, just like mortgage rates are. So what does that mean for the quality of life? When you think about it, the percentage of Americans are living paycheck to paycheck, right? It's over 60%, like 66% or something, live paycheck to paycheck. Most of the time, it's due to the big mortgage payments or the big rental payments. It's our biggest expense, right? Then you have other people who go and get a car loan for like $1,000 a month. I'm like, what are you doing? Different issue, different video. But everyone's biggest expense is just renting or mortgage. So it's nice to know that we have rates going in the right direction, we have demand going in the right direction, and we have the prices of rent going in the right direction. So I personally don't believe there's going to be a crash like 2008 for the reasons I listed earlier in the stream, which if you just tuned in, feel free to rewind. But I wanted to give, this hope to people that, hey, I think things are looking brighter. I know there's so much doom and gloom on the internet. I just wanted to break it down with my expertise in real estate and let you guys know that things are heading in the right direction. And maybe when there's rate cuts in a few weeks, we can go ahead and do this live stream again and get these numbers updated here. But affordability is coming. Affordability is definitely on the way. So, winners, thank you for tuning in. Don't forget to hit the like and subscribe. I appreciate your support. I'll see you in the next live stream. Stay winning.